Right. Welcome. It's Tax Tip Tuesday with me, Christine Walters, on today, March 7th, 2023. So today's tax tip has to do with being aware of the Canadian tax changes, that might affect you here in 2023. So, first off, the federal tax brackets are changing this year, 2023, as well as the basic personal amount. So, for those of you that don't know, the basic personal amount, that's the amount that each person in Canada can earn before they start paying taxes. There's also an improved tax incentive for new home buyers and a new tax that's being implemented on non resident property owners. So, first up, in an effort to keep up with inflation, the federal government has updated the tax brackets for 2023 for the 2023 tax year. This year's tax hike is much bigger than it has been in previous years, mainly due to the crazy inflation that we've been dealing with. But the bonus for you individual taxpayers, personal taxpayers, is that it might result in you paying a lower dollar amount of taxes for the same level of income that you had in prior years. So, for those of you that are interested, or you should at least be aware, the new tax brackets and tax rates are so if your total income is up to or below $53,359, that is taxed at 15%. If your total income is between $53,359 and $106,717, you're taxed at 20.5%. And if your total income is between the $106,000 and $430,000, you're taxed at 26%. Between 165,000 and 235,000, you're taxed at 29%. And if your total income from all sources is above $235,000, your income is taxed at the federal level of 33%. So, in addition to those federal tax rates, you also have provincial tax rates that vary across the provinces, as well as vary within those provinces across the level of income that you have. So, you could be paying anywhere from 15% to 50% of your income in taxes based on your particular situation. So, anyone who files an income tax return in Canada can claim the non-refundable basic personal amount tax credit. So that's the amount, like I said earlier, that everybody can earn before they start paying taxes. So this credit gives individuals who make less than a certain amount of income a full reduction in their income taxes. And those who make more than a certain level of income receive a partial reduction in their income taxes. So this year, the Government of Canada, or CRA, has set the basic personal amount to $14,398. So, like I said, basically every person in Canada can earn $14,400 before they have to start paying $1 worth of income taxes at the federal level. So, also starting in 2023 is a new incentive for first-time homebuyers. So, the financial institutions will shortly be coming out with another savings account called the First Home Savings Account, where homeowners or potential homeowners to be, can save up to $40,000 towards a home purchase. And so with that, it's a maximum of $8,000 that you can contribute over 5 years. And the 5 years don't have to be consecutive. You actually have 15 years to contribute it, but the maximum is $8,000 per year. So the earliest that you could hit the 40,000 is 5 years. So contribution to the First Home Savings Account are tax deductible, just like your RSP contributions, and the withdrawals are tax-free, just like your TFSA. So the First Home Savings Account is combining the advantages of the RRSP with the tax deferral of the TFSA. Along that note, for anybody who purchased a home in 2022, the CRA, federal government, whatnot, also increased the first-time home buyers tax credit from a potential tax savings of $750 to a tax savings of $1,500. So if you happen to be a first-time home buyer in 2023, you want to make sure that you make that claim, discuss it with your tax professional, and make sure that claim gets put onto your tax return or your partner's tax return. Another new program that CRA, the federal government, has pushed out for 2023 is the multi-generational home renovation tax credit. So that's another recently introduced housing tax benefit. The government will provide a 15% refundable tax credit of up to $7,500 for the construction of any type of secondary suite that's suitable for seniors or adults with disabilities. So if you have a person in your family who's getting on in years or who is somewhat disabled, by retrofitting your basement or doing a mother-in-law suite in your backyard, if your property can withstand that, you can get up to $7,500 back, actually cash in your pocket. So how it works is that the renovation and construction expenses of building out that secondary housing suite can be claimed on your tax returns, starting in 2023 and going forward, up to a maximum of $50,000. So 15% of $50,000 is $7,500 actual cash that could come back into your pocket if you take advantage of that, if it suits your situation. And then the other or final one, the government has or will be introducing an underused housing tax. So it's a 1% annual tax on vacant or underutilized residential properties owned by non-resident non-Canadians. So in addition to other things that the real estate market has done to try and cool that market down, this is another not incentive, but drawback, or tax, I guess, is basically what it is. It's tax that can impact some people. So the underused housing tax return must be filed by April 30th, 2023 by any non-resident or non-Canadian who owns a vacant or underutilized residential property in Canada as of the end of December 2022. So please note that this is a separate return from your standard personal or corporate tax returns. It's a separate filing. You need to give that information, to your tax professional or whatnot, so that account can be set up and those returns can be filed. The other thing that you should be aware of is, although this is primarily focused at non-Canadian citizens and non-residents, there are certain situations where the underused housing tax can apply to Canadian residents and or Canadian citizens. So I encourage you to discuss your property situation with your tax professional to figure out if you fall into this boat of people that might have to file that return. So what I'll leave you with for today, sorry, ignore the noise of the other computer, is that the CRA requires, Canada Revenue Agency requires, that most Canadian citizens file their tax return every year. If you have a somewhat complicated or very complicated situation, you might want to hire a tax professional. If you earn money from Canadian sources, even if you live in another country, you are likely to have to pay some Canadian taxes. As a non-resident, make sure that you check out all the rules as they pertain to you and your situation, or discuss your tax situation with a tax professional in detail to understand what exactly your reporting obligations are. So I hope you enjoyed this week's Tax Tips Tuesdays with me, Christine. Come back next week for another tip and enjoy the rest of your week.